move today. That's the title of the video. So I essentially just what's it, clickbaited you? That's what happened. You just got clickbaited in a sense. So what I'm going to be showing you is how to like actually start making money in the market, like everything you need to know to start making money in the market. Like we get the concepts now. Like this is really all you need to look for, right? So the reason I named it kind of the title of what it is, I already forgot. But the title is this because this is all you need to learn how to trade. Okay, I'm gonna be showing you everything. Just don't overcomplicate it, bro. Just like listen to what I say, ingest it, digest it, internalize it, and just see what I'm doing. Like I like just don't put too much value on what I'm saying. Like put value on it. Like of course there's value, but don't overcomplicate it. That's what I'm trying to say. It's really simple. Okay. Now the only reason you genuinely don't make money from this is like patience, greed, lack of understanding, and just experience. So the more you back test this, the more you're gonna see it. Okay? So let's get started into it. It's basically us building out you a model you can follow today, paper trade it, and align all these concepts, okay? So, it's a 4-hour time frame right now. Keep it simple, dog. Keep it simple. Keep it really simple. We're on the 4-hour. We don't need to be too zoomed out. I'm going to look over here. I just see we were in an uptrend. And then, boom, these candles came down with a fair value gap. Broke this low right here. Broke all the other lows above, right? And we closed below. So now I'm saying, look, a possible change or change in character here. We just had a change in character on a large time frame, right? So now I'm saying, look, we might be in a bearish downtrend. Okay? That is the bias I'm getting just from looking at the 4-hour, right? We were in an uptrend before, big move down. I could be like, now we might want to continue down. I still don't know yet. You guys, you don't have to expect, bro, to know everything by looking at one time frame. Like, just gather evidence, bro. Like, this is how you should be thinking when you come into the day. You're looking in the market. You're not looking to take a trade. You're looking for evidence to take a trade. You know what I'm saying? Like, don't just go in the day and be like, all right, I need to trade. It's like, no, I need a trade to fit my criteria, right? You don't always have to know what the market's gonna do, dog. You're not the market makers, bro. That's the end of the day. You're not the market makers. You're gonna lose sometimes. But you just have to make sure you learn from it, right? So, with that being said, we had an uptrend. We made a big displacement down. Displacement, once again, is just fair value gaps. Fair value gap. Big fair value gap down here. Displacement. Now, and also displacement is only valid when we break a low. So we broke all these lows, closed below it with a fair value gap, displacement. So we're basically just breaking the structure. We're breaking structure of the uptrend. That's basically what the fair value gap in the close below these lows shows us. Okay, that's the confirmation for possibly a reversal. Okay, don't complicate it too much. Now that I see that, I'm gonna take the most recent range from that move down that could possibly put us into a reversal. So that is from this high to this low. Because this high was the last high made before this big low. Simple. Between that, we see there's this fair value gap. Big fair value gap. Price is really trading into that. Big fair value gap. It's gray. Gray fair value gap, right? At the same time, I can see I'm in OTE. Right? So OTE is orange. Orange OTE, gray fair value gap we're tapping into. Okay? We are now in a steep retracement. Price is really retracing here. At this point, we're kind of deciding if we want to go inverse this gray fair value gap or go take this high in reverse. Right? That's all price can do. So if I'm looking short, which my bias right now is short, because also if we look, Sell side liquidity. Whoop, come on. Sell side. More sell side. What is this black line next to it, bro? Us closing below that, okay? Let's kind of move that. That's kind of throwing me off. Unprofessional. Just to even mark it out, change your character, right? So keep it complicated, or don't keep it complicated, my bad. Keep it simple. Look to the left, change of character. Big displacement. Now we're in a fair value gap. Now we're in OTE of the most recent range. And we have possible sell side liquidity we could target. Okay. 1 hour. 1 hour is just, we're seeing more of structure, right? So now if we want to go target these lows, what do we need to see? I want you to honestly answer this before I even do. Just answer it. See if you're right or not. Give you like a minute. I don't know, like probably like 20 seconds to be honest, but just think about it. What do we need to do first before we take these lows? If you did not say take these highs as manipulation and liquidity sweep these highs, you got some more back testing to do, bro. I mean, yeah, we could go down from here. Like, I'm not saying that. We got possibly a short-term high, a long-term high, and an intermediate one. But let's go to the 15. Like, yes, technically we could go down from here, but we need to see big displacement past these lows. So besides the point, I want to see manipulation, right? Because these are yesterday's highs. So I want to see us go take yesterday's high, because once again, if we go back to the daily profiles, we like to just take yesterday's highs and lows, right? So this is yesterday's high. I want to see us take that and go reverse to these lows. So let's let it play out. Okay. Market opens. Market opens on this black line, right? We can see in the first like 30 minutes, dog, we ain't doing nothing. So we ain't putting no trades in because we're not FOMOing. I see we take this high. We now just had internal manipulation, okay? So just, you have to look deeper, bro, into what price action is. Price action is low-key a metaphor, bro. Call me crazy. But what you're basically trying to see is the larger time frames aligning with the smaller time frames. Right? It's like putting pieces to a puzzle together. That's what you're doing. Because I'm trying to say there's external liquidity sweeps and internal. So as we can see on the 5 minute, we internally took this high right here, manipulated it. On a larger time frame, we did the same exact thing. So what I'm trying to see on the larger time frame is now happening on a smaller time frame. And we also just took yesterday's high, an important high that price likes to manipulate off of. And we have a bunch of stacked lows below us. So I'm considering this an A+ setup at this point. Why is it an A+ setup? 4 hour. Clear displacement to the downside. That already validates to me that we want to go down possibly, because we have that big fair value gap supporting us to go down, right? So we're in that. We're also in OTE. As you can see, you drop down to the 5 minute. We have yesterday's high. What does that price like to do? On the daily time frame, take yesterday's high or low and reverse off that. Boom, take yesterday's high, stack liquidity below, right? Now we have an internal manipulation, and we created a fair value gap, right? Fair value gap right here. Fair value gap right here. All right, so this is the original entries we're looking for. Liquidity sweep and then fair value gaps to be formed. Okay, if you look internally, this is a break of structure. So now it's actually showing us a continuation down with all this, right? And then this is the official change in character. So there's a lot of things happening right now, and there's a lot of entries I'm looking at right now. There's a lot of them. There's another fair value gap right here. Now this is where you make your own style, okay? So I've shown you how to read price action, right? Now the entries come in, okay? So I'd say for every trader, you should know the basics of like the larger time frame analysis to small time frame analysis, excuse me. You need to know how to intertwine those to find a bias and actually find an entry point, like a point where you can enter. You need to know those, but from there, you can enter however you want, depending on your strategy, right? So we have all these fair value gaps. Right here, we also have this inverse fair value gap. I'll make it blue so you can tell. Or yeah, I'll make it blue. Inverse fair value gap, right? So there's so many ways to enter after seeing this, right? Because now everything's aligning. A+ setup at this point. A+ setup. So there's so many things you could do to enter. You could enter on this inverse fair value gap. You could wait to see if we enter on this. You could wait to see enter on this. Or if you want to be patient, wait for that close of changing character. As soon as we did that, we made 3 consistent fair value gaps of a black candle. So now it's a high probability fair value gap, excuse me. From this point, bro, you could literally just put your stop loss right here. And target, you can literally target minimum these lows. Oh, of course, I'm going to show you how to target all the other lows. Target these, right? Do we have more lows? You could literally go for the whole range, bro, if you're feeling it. Because right now, everything's aligning, bro, to low-key possibly see us go down. And I'll reiterate that once I show you this trade to work out here. Hold up. had to move my phone over here because this dang suite I paid for don't even, like, my computer won't connect to the internet. So it's like, hotspot now. My phone was charging. But besides the point, 1 to 11 RR is low-key crazy. But you would have hit a 1 to 5 here, bro, if you took your profits correctly. This is probably the safest bet, honestly. Because this was yesterday's low, right? So we took yesterday's high right here, Wednesday. This is Wednesday. Today's Thursday. Wednesday right here. We took its high. As you can see, this is Wednesday's low. We go and hunt that. You notice how that plays out? A+ setup. You want to be low-key targeting daily highs and lows and session high and lows. That's what we play. Okay? And the model's simple. Liquidity sweep. Look for a confirmation on the smaller time frame for a possible reversal. What are the confirmations? Liquidity sweep, inverse fair value gap, regular fair value gap, break a structure, change in character. Whatever one works best for you, right? But then once again, you need to know what protected highs and lows are, right? As you can see, stop loss right here because we already tapped into this fair value gap. We tap into this fair value gap right here, and this is a breakaway. Boom. So, what I'm trying to show you is very simple. Okay? Let's go to the daily. There's going to be a lot drawn out here. Look at that. But just look how the daily works, okay? So I'm going to delete this. So this is the daily time frame, as we can see right here. We're also in a daily fair value gap at the same time. Add that to the freaking analysis bias, right? We can see this is Thursday, the black candle. The white candle next to it is Wednesday. We have the wick of the high right here and the wick of the low. This is the daily profiles. We go and manipulate one high and reverse to the other low in this scenario, okay? While tapping into a fair value gap on the daily time frame, okay? This is why it's an A+ setup. We now have daily profiles set in place, which is how institutional order flow works. I'm showing you institutional order flow. That is basically what I'm showing you. Tapping into an imbalance, yesterday's high, yesterday's low. Manipulate the high, manipulate the low inside the daily fair value gap. And this is just on the daily. I don't know why this just happened, but this is just on the daily. From there, go to the 4 hour. What do we see on the 4 hour? A bigger fair value gap. We see a change in character. We see stacked lows. Once again, putting you on game. Once you see 3 highs form like this, and they're stacked lows, you can usually see a reversal, especially when you tap into a daily fair value gap. You take yesterday's high, and you have yesterday's lows to target. And then you see this happen, like there's 3 highs in a row. 1, 2, 3. We can now see us possibly reverse, which in this instance, we took Wednesday's low, which is the daily profile, right? We can also see we're in OTE of this range. We can see that price is respecting OTE. So now we drop to the 1 hour. 1 hour, we can see more stacked lows. We can see that this is Wednesday's high at 10 a.m. Kind of crazy how it forms at 10 a.m., right? Study that, why highs and lows are made at 10 a.m. But Wednesday's high formed at 10 a.m. Wednesday's low formed at 13. That's not too significant. But as we can see, we go manipulate yesterday's high and go to yesterday's low with even more liquidity to go take below, right? So this is just the simple part, right? Like anyone can go and do this. Anyone can go find a bias, honestly. It's just you gotta really master your entries, bro. Because at the same time, accumulation, manipulation, distribution, right? Accumulation, manipulation, distribution. And then from there, just find an entry on the way down, okay? And we know the entries, fair value gap, inverse fair value gap. That's the entries. You just really need to be looking at structure and how everything's aligning to be confident in an entry. Okay, so the best entry here was probably this one right here. The most patient one. We waited for a change in character. I remember personally I entered on this inverse fair value gap. but that's just due to my experience and knowing how this all works. This is going to be the last high because we took Wednesday's high and we got Wednesday's low, right? So I knew this inverse variation was it, because at the same time, this is a 10 a.m. high. Price likes to reverse at 10 a.m., right? Because that's when the 4-hour candle opens, 10 a.m., reverse, take the high or something, manipulate it high, form a high at 10 a.m., and then reverse from that, okay? So what I want you to do is, Lily, go and find trades like this. This is the homework. Go and find trades like this, okay? Watch this video a few times if you don't know what I mean, like this. Just look for, once again, you just want to see price aligning, okay? You can use different concepts, but just make sure price is aligning on every time frame when you do this, okay? Don't overthink it. Watch the video a few times if you have to really get a grasp of what I'm saying, because sometimes in life, I can't lie, you need to rewatch things, okay? Your brain doesn't take it all in the first time, okay? It's new information. You need to watch it multiple times to really get a grasp of it. It's kind of like reading a book. I'll read books, I'll forget like most of the information, right? I bet if I read it a few times, I would start to know more of the book, right? So watch this a few times. Once again, I have stacked lows, right? Very important of what I'm trying to find here, okay? And to see where price can go, also the standard deviation tool matches up perfectly with the 3, okay? Everything's aligning. So now let's just go into what you need. You need long position, short position. Okay, that's in this section. Go to the Fibonacci, this one right here. Go to your Fib retracement. You can click on it, go to template. These are all mine. What you need: standard deviation, 0, 1, 2.5, 2, 4, even 3. Make them any colors you want, up to you. This is just my template. Next, you need equilibrium. Go to the settings, 0, 1, 0.5. That's all you need. I like to make my 0.5 green. Equilibrium represents the green, okay? Next, you need OTE, 0, 0.62, 1, 0.5, 0.79. That's what you need. The 0.62 to 0.79 is OTE, and the 0.5 is equilibrium. From there, that's all you really need for the Fibonacci's. Once again, the lines are in here. I just use the trend lines just to mark out my highs and lows. Fair value gaps in the circle thing, I guess. Geometric shapes, rectangle, that's what I use. Just to draw out my fair value gaps, like change of state deliveries, order blocks, stuff like that. So that's all I really use to mark everything out. I don't mark out these highs, but as you can see, everything I just showed you aligned from the larger time frame to the smaller time frame. Rewatch this a couple times and you'll see what I mean. So I hope this video helps. If you have any questions, text me. You got my number. I'm gonna text away. So let's lock in, back test this, study this, write this down. I hope you wrote this down. But yeah.